Hello everybody, this is Jim once again at freechartvideos.com using time-honored techniques to understand modern markets. This video is for educational purposes only, and it is not intended to be used as any form of actual investment advice. I can draw lines on charts, but you and only you can draw your own conclusions from your own due diligence and make investment decisions that are suitable for your personal financial situation. I don't know what your financial situation is, but even if I did, I'm still not a licensed professional. I'm just a guy who draws lines on charts. And today we are going to look at the chart of the dollar index, because this is a very interesting chart. And those of you who follow the my S&P 500 daily updates will want to watch this, because the markets run somewhat contrary to the dollar chart. So it's kind of an inverse relationship. Let's take a look. Okay, we're going back a ways here. We're actually going back all the way to mid-1994 to present day, because we need to take a look at some of the long-range implications in this chart. And matter of fact, we can even do a little bit of additional work here, show you that the dollar index was in a rising channel, as shown between these lines right here. It broke down. It then back tested this line, came back down, made a little bit of a rally, moved back down again, then entered a period of what looks to me to be consolidation. Now, I say that's consolidation because this pattern was entered into from above, okay, and it had 1, 2, 3 touches on this top line, 1, 2, 3 touches on this bottom line. Then this pattern broke down. And if we trust this chart like we trust the charts of other stocks and indexes, then we know, based upon the movements of the dollar index in this chart, we know that we are looking now for a target based upon the height of this pattern right here. Folks, we are looking at a target, and I'm kind of, I'll tell you what, I'm gonna be generous. Let's redraw this. Let's say, instead of this first reactive move, let's take the second reactive move right here. We are looking at a target of about 60 bucks. I think it's actually going to go lower than that over time, but we're looking for a target of at least $60 in the dollar index. And additionally, if we go in and look at this on a well, we'll do that in just a second. We're going to look at a one-day chart so you can see some interesting things that are going on. But you can see, if we draw a line across this top and this top, which I've done, and then we create an exact parallel line, you can see that it looks like the dollar index is in a descending channel of pretty significant proportions. Now, mind you, the height of this channel is about, what, that's 72 and about 96, so it's about 24 high, so that means that there's a lot of wiggle room in here. But the fact that this pattern has broken down the way that it has, and again, looking on a one-day chart, what do we see? Well, we see what looks to be the breakdown, a couple of attempts at a pullback, and all of this looks to be, like, at least right now, in a descending wedge. Now, what does that mean? Well, that means that at least for the intermediate term, and when I say intermediate, I'm talking about 6, 7, 8 months to a year down the road, I don't think it's going to get down to that 60. I think it will probably break out over the top of this line at some point, come back for maybe another back test up in the 70s, but I think eventually the handwriting is on the wall. And that is, this pattern points to something around 60 bucks. And that would be potentially available as early 2013 if this channel holds true. So we got this top line, this bottom line. This bottom line gets down to about 60 bucks right around the very end of 2012 or 2013. So this is by no means a short-term call. And you know, with what's going on with the Fed printing money left and right, and who knows what's going to happen with regards to the debt ceiling limit and all that good stuff. But I don't think there's anything really fundamentally that anyone can look at and say, well, this is a good reason for the dollar to firm up. I just don't see that. So I'm thinking this chart is probably pretty trustworthy. And as that move takes place, folks, we're going to see the markets, in all likelihood, mount a strong rally. Again, this is more long-term. This is not immediate. This is not something I'm saying, get ready, this is going to happen 2 weeks from now. This is years down the road. Just like when in summer of 2009, I made a call in the S&P 500 for 1340 to 1350 back when the S&P was around 980. That was nothing, and I got a lot of ridicule for that. But that was not a short-term call. That was, and I said it at the time, we're looking a year and a half, 2 years down the road. And sure enough, a year and a half, 2 years down the road, there it was. So will we get that kind of perfect action out of this chart? I don't know. But I think at this point, the odds favor this dollar index selling off and approaching that $60 level probably within a year and a half to 2 years. So, you know, if you're a day trader, that's of very little value. But again, as we look at it on a daily chart, I think that if this line right here, and I'm going to draw it right there, if that line breaks, then we're going to head down, and we're probably going to get down to about 71 and change, because that would make this little formation right here a bear flag. Okay, you see that? We sell off, we make a kind of a bear flag here, then we sell off again. Now we're going up. I think we're going to bust out of the bottom of this line right here and head down for 71 to 72, and I think that is probably going to take place within 45 to 60 days. And again, keep in mind, people, technical analysis is just educated guesswork. You know, it's nothing magic. It's certainly nothing for sure. But we try to read these charts, and we try to gather as much information and as much, well, I guess the word I'm looking for, we're looking for what the markets seem inclined to do simply by studying their movement. Again, there are fundamental things that could happen in the world that could throw all of this into upheaval. We all know that. We're grown-ups. But right now, with all things known and the market taking everything that is known into account, the dollar index does not look like it is in good shape at all. So look, thanks for watching this video. Please make sure you check out my other videos. I do a daily S&P 500 update, and occasionally offer a video or two for a small price at the website at freechartvideos.com. Help me keep this free. How can you do that? Well, for one, you can come by the website and give me a little bit more web traffic. You can also subscribe to my YouTube channel. You can tell your trading friends and partners and buddies and whoever about what I do. If you like what I do and it's valuable, tell your friends. If you think I'm leading you astray, then do me a favor and spread my name to all of your enemies. I could use their traffic too. So look, take care, and let's see what the markets bring us this week.